All right, Option Sharks, this is your option coach here. And today I'm joining you on the beach on the Pacific coast. Check it out, very beautiful view, nice and relaxed, people out in the sun with their family. And I'm just in a little area where it's a little bit more secluded. But either way, I thought I want to use this time to create some content and also share with you guys some knowledge about how the market works. All right, so in this video, I want to cover about what the market is looking for. The market wants certainty. It wants positive guidance, forward progress. And when the market doesn't have that, that's when you'll see corrections, pullback, all right, when there's uncertainty in the market. So today, this weekend is a Sunday, it's a Memorial Day weekend. And before the weekend, the administration, right, Trump in the office, he announced 50% tariff on the European Union. So obviously when that happens, that's going to affect European stocks, right? European companies, they are going to be affected by the 50% tariff. And the way I look at it, you know, Trump's style, his tactic is to bring the European Union and the companies to the negotiation table, which it may or may not work. I don't know. But all I know is that I trade options and I need to use the news to my advantage so I could benefit from the news, right? And also capitalize on it. Now, in this moment, and then also today's Sunday, news came out that Trump decides to delay this 50% tariff and he's moving it out further along. So now he's, you know, like what he's doing before, 1 minute is this, another minute is that. So there's a lot of uncertainty and no proper forward guidance on what to expect. So this makes it hard for investors to invest properly. This makes it hard for companies to give their forecasts and their forward guidance as well. So understanding that when there's uncertainty in the market, when there's no proper forward guidance and investors cannot make proper decisions and assessments, this is where you have shaky grounds. This is where you cannot make good, sound investments. And it's much better to sit back, relax, see how the market plays out, and see where the opportunities are. All right. So this is something that you need to factor in when you are trading options, and understanding that with the current times that we're in, the administration that we're working with, 1 minute, you know, Trump is feeling this way, another minute he's not feeling that. So you have to be very cautious when it comes to trading in the markets, especially trading options. And I recommend picking shorter timelines, shorter expiration dates. Okay. Either way, if you like what I shared today and it makes sense to you, like and subscribe. You can comment as well. I always respond. I also provide my booking link. So if you do want to work with me on a one-on-one base, you want to generate consistent, safe, passive income, semi-passive, I'll be more than happy to help you teach you how to trade options. All right. And also in this video on the second half, check it out. There is a clip of a one-on-one coaching, exactly how I work with my one-on-one clients, right? My option sharks. So you can see exactly what I do and how I help my members make money. Okay. Yeah. So don't forget, like and subscribe. And then you have my calendar there, book a time. And if you want to understand how I work and how we can help you. All right. So I wish you a great day. One more time for you to see the view. All right. And then I'll see you guys on the next one. This trade we opened 5 contracts. The current value of these contracts now are 0.01, means they're worthless. They're only worth $1. Okay. And initially, when we opened this trade, oh yeah, there you go, your average credit. So the left column, on the left side where it says contracts, average credit, days sold, iron, break even, that's what we did on May 13th. Okay. And then on the right side is what the value of these contracts are. Current price, market value, expiration date, right? So iron is currently trading at 856. We did a $7.50 put. We did 5 contracts. We collected $18 per contract. So 18 times 5, that should give you
$20.
18 times 5, let's see, $90.
Okay, cool.
And then the market value is right now is 0.01. So current price is 0.01. So $1 times 5 is $5. Right. So that's why it says market value minus 5. So if we take 90 minus 5, and you'll see your total return says 85. So that's how they come up with the number. Right. So in this case, this is a home run trade. What we're just going to do is just close it out early, pay $5, get out, release the collateral, and then we can make another trade. So click on buy.
Buy to close. And all 4.
Yeah. And the contracts are at 5.
Or was it 555? Geez.
Yeah. Okay. And then we pay $5 to get out, 522.
Okay, cool.
And you see 37.50 collateral is being released. So that goes back. That's not being upheld anymore. And boom, there we go. All right. So this is why we want to be able to release collateral early so we can make more trades for next week. And then it's done.